Good morning and welcome to the Killik & Co market update. Equity markets have been a little bit calmer this week, but we have seen lots of headlines about the oil price going negative. So let's have a look at exactly what happened here. When you look at the oil price, you tend to see two different prices. One is the spot price, which is the price you would pay for immediate delivery of oil, and the other is a futures price. And this is the price you would pay for a contract, which enables you to receive delivery of oil at some point in the future. You've also got two main types of crude oil. One is Brent crude, which is North Sea offshore oil, and the other is West Texas Intermediate, or WTI, which is US onshore oil. Because Brent crude is already offshore, it tends to have slightly lower transportation costs, and therefore the oil itself tends to trade at a slightly higher price. What we've seen this week is that the futures price for a barrel of WTI crude for delivery next month fell to a negative price. And what happened here is that because all of the oil storage capacity in the US is currently in use, nobody wants to take delivery of more oil next month because there's nowhere to keep it. So what we've seen is that the futures contract for the delivery of WTI next month temporarily fell to a negative price. And in fact, it fell to a price of minus $37 per barrel. So a really unusual move here, and it really is down to a technicality within the oil markets. But what it does show is that at the moment we have got a huge imbalance within the oil markets. We've got far too much supply and far too little demand. Now, this movement in the oil price futures market did have some connotations for ETFs. Now, anyone buying an ETF, an oil ETF, is probably doing so because they want exposure to the oil price, not because they want to receive any physical oil. And how these oil ETFs tend to work is they will buy some oil futures contracts for delivery at a certain point in the future. But before those contracts expire, they will sell those contracts and buy other contracts that have a later expiry date. So what happened for a lot of these ETFs this week was that they were forced to sell existing contracts at a negative price, and they had to replace them with other contracts at a positive price. So that caused big losses for some of these ETFs. Here's a chart here for USO, or US oil, which is one of the larger ETFs focusing on the price of WTI crude. And you can see that the price of this ETF has fallen from over $12 to just over $2. So a really big fall in price there. And in fact, it has massively underperformed the price of oil itself. And I think this is just an important reminder that when you buy an ETF, you should really have a look at how it works and the structure of it, because sometimes these ETFs don't actually track the price of whatever commodity or security it is that they are supposed to be tracking. Also this week, we've had a bit of a rebound in the prices of house building shares. The reason being that some of the major house builders, Taylor Wimpey for example, have announced that next month they will be restarting work on some construction sites. So that's been good news for house building shares this week. And they've also been helped by the fact that a number of lenders in the UK have announced that they will be relaxing the restrictions on lending that they imposed when this lockdown first started. So two bits of good news there for the house building sector, and we have seen that sector moving higher this week. Also this week we've had the latest UK inflation numbers, and these showed that inflation in the UK has dropped from 1.7% down to 1.5%. However, it's questionable at the moment that what is being measured in order to come up with this inflation number is really a true reflection of our current cost of living. Have a look at this chart here, which shows what is going into the basket of goods that is being measured in order to develop this inflation number. And as you can see, over a third of this basket is dependent on things like hotels, restaurant, travel, transport, culture and recreation. At the moment, because we're in lockdown, none of us is spending money on any of those things, and therefore it really is questionable whether or not this inflation number is really reflecting what we're actually spending money on at the moment. Taking a look at next week, it's another very busy week for corporate reporting season, and we're particularly looking forward to results from Visa, Amazon and Microsoft. That's it from us. Have a great weekend, and we'll see you next Friday.